Hello everyone, this is Juan Sarmiento and today is Monday, February the 7th. Sorry to have missed last week. Shouldn't be any problem to fix if there is any issues of any leftover assignment last week. So let's go through first our current positions. Up to this year we have $6,200. Nice profit so far. So let's go through all our current positions and see what needs fixing. I'm going to organize them alphabetically and start with Home Depot. Let's take a look at the chart. I think Home Depot is about to break down to a new low in all likelihood, but they have earnings coming up. Okay, so earnings are on the 22nd before the market opens, which means really it's on the 21st we have to be out of the position, or at least transform it in a way that it doesn't matter to us whether it goes up, down, or sideways. So let's go to take a look at the Analyze tab. And looks like we had an assignment. Okay, so being Monday, we need to cover that right away, unless we have enough cash, and we do. Okay, because the assignment is positive shares. That's because the stock went down. We had a short put, and now it's assigned into shares. So yeah, in theory you could keep those 100 shares and sell something against it. So it's a nice way to, if you felt that the Home Depot has made a bottom here, it's a nice way to keep shares. I'm not going to do that. And we have the puts here expiring on the 18th. Okay, the calls, well, I have a 410 call put here. The call is probably worthless by now. If I try to sell that, close that, I will get 5 cents. If you care, you could close it. Okay, if I close it at 5 cents, I get $8.07 once the commissions are removed. Okay, let's send that off. And usually will get filled right away if you put it at the market price. You can see here that the short options were at 410, so we can do this way. We could exercise these shares, but that would mean that if there is any extrinsic value on that put, you will be losing that. If I exercise that, it would sell 100 shares. That's what it would do. Okay, but we don't want to do that necessarily. What we might want to do is do a cover put. So Grace closing, it says covered put right here. And let's analyze that. And what you're getting for doing it this way is 17 cents if it gets filled at that price. See, there is a credit of 410, and we have the put is 410, and so I'm getting 17 cents on top, and we're going to sell 100 shares, and that's what we have here. Okay, so we end up with this 350 put. So let's do that. And as I told you, I believe that this stock will continue down. Okay, so now I have just this put at 350, which is out of the money. You see it here, okay? And the stock is trading at 357. You can leave it like that, or you can close it for $4.25, or you can sell something at the same strike price. Let me just show it. Analyze trade. And what I'm going to do could be this. You could lower something at a lower strike price. In this case will be 340 or 345. I don't think 345 will work, or maybe it will. Yeah, 345, and then you end up with a vertical spread. But of course, right now is worth minus 547. Okay, and you could lose about $120 if you did that and the stock didn't go down. Okay, so you decide you want to do it or not. Okay, I don't, because that's not the kind of trade that I do in this particular account. Okay, it's not what I'm teaching. I'm teaching the Gini trade. So in this case, I just close the trade as I have it here at $4.10, and that's the end of my story here. But you potentially could create that vertical spread if you believe that the stock will continue to go down. I don't want to make that assumption, so I'm going to recover my whatever I had, and then if I go to the monitor tab and look for Home Depot here, you can see that I made $593. I'm perfectly happy with that, and whatever I made the previous year if the position was open longer. I'm going to leave it like that, 593. I'm not going to overanalyze it, but that's what you would do. You can exit one leg at a time, or do the cover puts, whatever. You just want to get out of everything. Let's go to TER. TER is Teradyne. As you can see, we've made quite a bit of money on that one because it collapsed after earnings. Okay, so let's go to the Analyze tab and see what we have. As you can see, I have made a delta positive. I don't really need to change anymore. But do I believe that the stock could go down? Well, right now it looks quite bullish. And right now it's delta positive. You can reduce the deltas by adding a short call or selling one of the calls. I'm not exactly sure what I should do here. It looks like we have 160, 170. When the stock was going up, we were happy collecting profits on the upside, and this is why we rolled them up, and now these are pretty worthless now. And then we have the 135 call, which is two of them and two of them here. So we would collect money if the stock went up, and we ended up in this cone here. Could be. And this may be making a bottom here. I'm not exactly sure, but I would suspect that it could go back up to the 130, 40, whatever the Ichimoku cloud area is, 143. Yeah, it could end up in this cone area, which would be nice. And for the time being, I'm going to leave it like that with a 41 delta. And you can see that I did reduce my put here to 110, and we have 32 puts here. If we look at the puts only, we have two here. That's one more, that makes three, and we have two here. Okay, so apart from the outstanding put, the other two puts cancel each other, more or less. So yeah. We're not going to make any further transformation. I think I'll leave it here for now. If the stock rallies strongly, I might take my profits. Okay, let's go to UPS. Okay, this stock has been going up nicely. Let's take a look at the chart. Oh yeah, it really gapped up on earnings. Again, that's a lucky shot because I don't usually stay after earnings, but obviously the value of that trade wasn't that much, and I went over, and the market value is now 21.58. Okay, so I could take some of my profits here. And how do I do that? Well, I could roll up my outstanding call. Let's erase everything and look at the call first. One short call, two long calls, and there are 210. and the stock is trading at 226, so I can roll one of those out calls of the two long calls, which is the outstanding call, to roll it up. So analyze rolling, and we're just going to do one of them. And what do we do? Well, let's see, we could buy the 125, sounds good, and the expiration should be the same, March 18th. And no, it won't take the 225, but it would take the 230. It will be available there. And this is what we end up with, a delta which is positive but not by much, and we're gonna get $1,305 in profits. Okay, let's do that, and that will reduce my exposure on that one. Let's go to the monitor tab and look at UPS here. United Parcels is trading at, we have $2,100 on that one. So by the time, if and when this trade gets done, we would have half the price of that position being erased from our account. Let's go back again to the account statement. 21 minus 1,300, essentially. We would reduce our exposure considerably. We end up with $900 there. Yeah, let's do the WFC. Okay, Wells Fargo, and here we have, well, what looks like a good trade here. On the 18th is the expiration, and today is the 7th, so we have 12 days or so. So on Friday we can look at this again. But it looks nice, looks good. Let's go to the monitor tab, Wells Fargo, and we have $8,928. And it right now, year to date, is a little bit of a loser, but not by much. Okay, now I'm going to look at some stocks that I'm considering here. They might not turn out, but I think we should go through them. Okay, and I have them. Let's go start with a chart. And with a chart, then we can see the implied volatility and then judge from there, rather than look at the spreadsheet. I can analyze it here by taking a quick look at it. Okay, so this one has an implied volatility of 26. It has been as low as 21, so even 18. Okay, so that's not the lowest implied volatility, but they reported earnings, and the earnings, they beat by a wide margin, so that looks good. Okay, let's go to the trade tab. Let me just get my spreadsheet here. Let's see. I'm missing my spreadsheets. Please give me a second. Okay, I have my spreadsheet here, so let's deal with this checkpoint software, CHKP, and first of all, expected versus actual earnings. We say that here. Just point here and you see that the actual was 1.886 in the estimate 225. 1.886 versus 225. And that's 19%, so yeah, you would think that that will be okay. The current IV percentile, which we need to be about 15%. Let's go to the trade tab and go down here. On the trade tab, you see that it says today's options, it says 35, so it's quite high. The volatility is a little too high still, and I think that's going to be the issue right now because the stock market has been down significantly, so volatility is still a little low. So that's a big strike against this trade. Okay, let's suppose I enter a trade here anyway. Let's go to the trade tab, and here we have April. It would have to be July for the sell because that's more than 90 days to expiration, and select the price at 130. The stock is trading at 127. Buy custom, and I'm gonna say Gini trade and analyze that. Okay, and that was my UPS field. And let's go to the monitor tab and check that up, UPS. And as you can see now, I have $840 in the trade. Good. Let's go back to the Analyze tab. In this case, February the 18th will be my short. That's a little too soon. That's 11 days of February. Let's go to March 18th. And then you see the volatility here. We can use that right away. And the back month is 25.30. I'm using this over here in your bottom right corner. Okay, these are the numbers that I'm looking at. So 25.15, 23.92, and then 23.69 and 24.46. Okay, so yeah, that's quite acceptable. It's very, very close. Okay, so that's acceptable. That's acceptable too. Okay, how about the liquidity? Is it liquid enough? That's a critical point here. Okay, that doesn't look like that much liquid. So let's put it here. The mid would be, I'm using these numbers here. Mid and natural. Okay, so I'm going to put them here. 23.83 versus 26.85. That gives me 1.2%. So no trading that. Okay, no trading volatility. The liquidity is not liquid enough, and the current IV percentile is too high. So that eliminates this trade. Okay, we can copy this and paste it, and then we'll look at it again next week or this Friday and see if that has changed. Let's look at the next one is UPS, coincidentally. Okay, would I trade UPS knowing that we just made a trade? We did have the trade, we went over earnings, and now do we want to get in again? Okay, because we just have $800 invested there. Okay, keep that in mind. You don't need to add any more. You can go to, the limit would be 9,800 for my 10% of my account. Okay, so let's see if UPS is worth doing. Okay, let's go to the first, let's pull it out here. Okay, so I'm gonna put here CHKP, and here I'm gonna call this UPS. And okay, so first, what was the earnings expected versus the actual number. So the earnings 3.1 versus 3.59. 3.1 versus 3.59. Okay, yeah, 15%, that's good. So you would trade this, motivated to trade. Let's go to the trade tab and scroll down, and what is our IV percentile is 38%, is too high. Again, volatility has been high, so I would tend not to do that one either. The volatility should have come further down after earnings. But let's say we are stubborn and we want to do it again. Well, what would be my choice for back month? It would be June. And what is the strike price? 225. It doesn't exist, so we would have to do 220. Right click and say buy custom. Well, it won't show here because it's the Analyze tab. We need to be in the Trade tab. Okay, 220, right click, buy custom, Genie. Analyze that. And you can see 27, way higher than 23 and 26. That's probably not going to be okay. Let's do that right away. The back month is 27.32 versus 27.44. 23.63, 26.44. And well, I thought it would not be, but I guess the calls are quite high. No, let's type that again. 23.68 versus 26.37. Okay, that's better. Okay, it's acceptable still. It's less than 3. Okay, so we have two trade. Let's see what the liquidity is, and then we know that the current IV percentile is a little high, and liquidity we need to see in the end if we want to trade this. Okay, duplicate. I think UPS is probably liquid enough. Okay, the mid is 43.18 and the natural is 44.2, and that works. Okay, so we have 3. The only thing that bothers me is the current IV percentile, but it's 1 out of the 4 items. Okay, if we say create duplicate, remember we have already 800 in the trade. Confirm and send, and that's 400. If we double that, that would be 8. Yeah, let's do 2 of them. Create duplicate. Confirm and send, and let's say multiple, and here's our account 15, and if I put 2 is 8, 6. Okay, and we could do as much as 10,000, almost 10,000, 9,800. So yeah, this will be okay. This will be okay. We have $800 in the trade, so that would amount to 9,400, which is less than 10% of our account. So let's send that off. Okay. It could get confusing, but it will be all right. Okay. Let's finally do another consideration here is AXP. AXP is another I'm considering. They reported earnings. Volatility is pretty low here. This might be okay. The earnings was 218 versus 1.778. So let's do that. And we double this, duplicate, and enter AXP. We need to change the names here so that there's no confusion. UPS. AXP. Okay, let's look at the earnings first. 218, the UPS got filled. 218 versus 178, 178, 218, 178. 1.78 versus 218. Okay, that's a quite a big beat, 22.5%. So that's good. Let's look at the implied volatilities over here. Let's go to the trade tab. And over here we scroll down on the trade tab until we find this IV percentile. Again, 30% is high. That's because the market overall is high in volatility, so we're getting pretty high implied volatilities. And what happens is that volatility could go down further and makes it more difficult for us to make a profit. That's why I have it there as an indicator. Okay. If we were to do this trade, it would be on June the 30th for the 130 days, 130 days. The stock is trading at 186. We could do the 185 here, and right click and say buy custom Gini trade, and let's analyze that. And this looks fine. Okay, look at the implied volatility. It's the same pretty much for everyone, so we don't even need to do this, but I'm going to do it anyway. The back month is 30.97 and 29.41, and the calls 29.79 and 28.95. Okay, excellent. It's very, very tight, so there is no skew to speak of. Liquidity, again, all you need to do is say create duplicate. And here is our mid, also very tight by the looks of it. Liquidity 39.23 for the mid, and 40.05 for the natural, and that gives us 2%. That's tradable. Okay, so yeah, that looks fine. Trade. Okay, so for 3 out of 4 possible indicators are good. So again, create duplicate, confirm and send, let's say multiple, so we can control the number of trades there. And we want to do 78, 100 will be less than 10% of our account. And we need to say the account is this one here. Okay, so let's send that off. And our account is, and the one ending in 15, again, close to $100,000. Okay, so we have two trades. One is the UPS, and this one is AXP. Another one that I have considering is Humana. This stock really came down and went up. No, the volatility is still quite high here, so no, and that I won't even consider. It came on my indicators because it's rallied very strongly, but yeah, that is after collapsing. Okay, so no, I'm not going to do that. Volatility needs to drop some more. And then Juniper. Juniper also has been going up since earnings. They beat by a wide margin, it looks like. Volatility is at 29. Let's go to the... Yeah, let's try this out, okay? Let's try this out for size. And the first thing we need to know is the earnings. Is 0.56 versus 0.39, 0.4. 0.56. That gives us 40%. Yeah, that's quite a wide margin. So yeah, you will be tempted to see that. The tendency will be for that stock to continue on higher. Okay, unless of course the market collapses, and then it will go down, and that's what we want. Okay, let's look at the current IV percentile. Let's do that under the trade tab, GNPR, scroll down, and 23 percentile. That's not too bad. That's actually quite acceptable. Normally 15 is my limit. But assuming that the other two items are okay, we would trade this liquidity and IV percentile. So and the volatility skew rather. Okay, so here we have July. That's quite a way. 158 days. 66 for the next one. So we're gonna have to do this one. It probably makes it more illiquid. 35. Let's say buy custom. Genie. Analyze that. Here we are, and it looks very even here on the volatility skew. And let's start with the back month, 28.48. Again, I'm at the bottom right corner of your screen. That's where those numbers are. 27.39, 26.99, and 28.25. And that gives me 0.31, less than 3% for sure. So that looks very even. That looks great. And then finally, liquidity. If that works, then we could trade that. And mid 7.75 versus 8.10. That's not too bad. Liquidity is here. So the mid is 7.73 versus 8.1. And that's a little too high. So we have two strikes against us here. Okay, so you have to be motivated, exquisitely motivated to do it, and with a 40% earning speed, that's a good motivation to enter this trade. I would think that it's gonna keep on going higher unless the market overall goes down. Okay, that was my AXP, got filled, and here on the Juniper, if I say confirm and send and say multiple, and here we have, because the strike price is 35, you could do quite a number of Genie trades here. Okay, so we can do 12 of them. Okay, that's 10% of my account. Let's do that. Less than 10% of my account. March 18, July the 15th. And that's it for today. I'm going to make sure that this gets filled. And again, today we're up $310. Actually, that's including the SPX. And that's it, folks. Thank you for joining me, and see you next time. Bye-bye.